You're a person who has investigated a lot of mortgage fraud, so we wanted to get your expertise here.
It's an intentional misrepresentation of facts to induce somebody else to take an action that they wouldn't have otherwise taken. You have to show the person's intent was to defraud, to misrepresent in order to induce some sort of benefit back to them. That becomes difficult when you're just looking at a file.
Welcome to Keys to Real Estate, where we explore the issues shaping the housing and settlement services industry. I'm your host, Mary Schuster. Well, mortgage fraud has been making headlines lately, from allegations involving high-profile political figures to renewed scrutiny on how occupancy and income are represented in loan applications. And while these stories grab attention, the underlying mechanics of fraud and why it's so difficult to prove often go unexplained. So today we're unpacking that complexity with David Friend, a practicing attorney and former senior counsel at the Consumer Financial Protection Bureau. With experience on both the regulatory and private practice sides, David brings a rare perspective on how fraud schemes unfold, what red flags professionals should watch for, and how the industry can better protect itself against evolving risks. So let's get to the ins and outs of mortgage fraud with friend of the pod, Mr. David Friend. The presenting sponsor for this season of Keys to Real Estate is Closing Lock. Working in title, do you ever feel like you've got a target on your back? Every year, $2 trillion moves in and out of escrow accounts in the United States. Fraudsters are watching and waiting for one wrong click, one unsecured email, just one oversight. And then just like that, your client's life savings are gone. That's where Closing Lock comes in. Closing Lock provides title companies a secure, all-in-one platform to prevent fraud, protect funds, and streamline closings. Over 1 million home sales have closed safely without incident in Closing Lock. The fraudsters only have to be right once. Title companies have to be right every time. Closing Lock has your back. Visit closinglock.com today to learn more. David, welcome back to Keys to Real Estate. We're so glad to see you again.
Hello, Mary. It's good to be back.
Well, you were the first person I thought of when mortgage fraud started hitting the headlines lately. I know that you're a person who has investigated a lot of mortgage fraud, knows a lot about mortgage fraud, so we wanted to get your expertise here for the people so they could understand what's going on out there. And so I guess my first question for you would be, when people hear the term mortgage fraud, I think something comes to their mind, but it may not be the whole picture. So I'd love for you to talk about, at the top level, does it mean that somebody filled out a document wrong, or what's going on?
Part of the problem is we're talking about legal matters, right? And so legally, the term fraud has a very specific definition. And a lot of the time when it's used in the press or by others who don't have a legal background, and even people with a legal background when they're trying to communicate with the public, it's a term that's sometimes used to say there was a misrepresentation in a file. There's a document that says one thing and it's not true, or it's not true now. And so that is a general thing. When I would look at files and review files, would I see something that is checked wrong, right? Or it's like, okay, well, there's something here, right? What does the rest of the file say? What do other documents in the file say? What do the emails between the parties say? And the reason why that's important is because of what fraud actually is in a legal context. So if I'm looking for fraud and investigating a file for fraud, there is a standard I'm going to have to meet in order to show fraud, just generally speaking. It's an intentional misrepresentation of facts to induce somebody else to take an action that they wouldn't have otherwise taken, just in a broad general context of law. It's a criminal violation, right? So there's jail time and all sorts of penalties that can be involved in it if you actually committed fraud. What's important there is when you're going through files and you see a tick box on a particular form or document, that's all well and good, but it's hard to prove intent. Did you intend to make that representation in order to get something that you otherwise wouldn't be able to get from a particular company or a particular person? So context matters here, because intent, you have to show by beyond a reasonable doubt that what the person's intent was to defraud, to misrepresent in order to induce some sort of benefit back to them. That becomes difficult when you're just looking at a file, right? You can have indications, the whole file, every place that's in the file itself, it's indicating that this is a owner occupied. I mean, that seems to be the one type of mortgage fraud that people are talking about. The whole file, it's everything in it. There's no indication that it's supposed to be any other purpose. Well, that's all well and good, but that's not everything that would go to show what your intent was when that file was applied. And it also doesn't show you who defrauded. I think that's the other thing that's kind of important as well.
I'm going to want to double click on that if you'll let me, because I think there is, at least some of the reporting I've seen, not industry specific reporting, but I think even some people in industry would say, well, real simple, 1003 or whatever doc it is, they checked this box and they signed it. So there it is, black and white, open and shut.
It's much more complicated than looking at a single document, right?
Okay.
So the questions I have is, what is the document? Okay, what is the document? So you're using 1003. So it's a formal mortgage application for purposes of a COA, right? Which is different than the application for TILA or application for HMDA reporting, or et cetera, et cetera, et cetera. So it's a question of, okay, that's the purpose. Well, look at the entire form. Don't just look at the checkbox on the form.
Okay.
You also have to look at the entire form, the context in which that form is done. When I've looked at files, loan files, originated loan files, there are typically multiple copies of any particular document in there, especially a 1003.
Yeah.
I'm not surprised if I find 5 copies of a 1003 in any loan file that I'm looking at.
And that's something that I don't think people who don't work in this industry understand. Like the number of 1003s that a borrower signs throughout the transaction are a little astonishing. Sorry, that was a pause, but I just think that's commonly misunderstood.
Yeah, and so if you're investigating a file, what do you have to do? I'm coming at this from the aspect of, I'm looking at a file to try to establish that there's likely, right? There's always the chance that you're wrong. Likely some mortgage fraud involved here, and it just doesn't have. It's not even if it's about occupancy, if it's about income, it's about any type of representation that's on the 1003. The 1003 itself, you can have multiple copies. So which one was operative? Well, one of the things that I know from reviewing the 1003 so many times is that it includes a lot of information that has nothing, that the borrower is not going to know. It's not going to calculate what the FHA down payment percentage needs to be, which I know it's not down payment, but I can't remember the term that FHA uses instead. It's something where there's a lot of information there that is not necessarily provided by the borrower. It's provided by the underwriter, the originator, the lender. The purpose of the 1003 is largely to provide documentation that provides information for secondary markets to review the loan for purchase from or originator.
And I don't think that's what most people think the 1003 is for.
No. I mean, it's an application that the lender relies on, yes, but it's also including information that the lender puts in order for it to be sold on the secondary market. Not just what the borrower has.
The debt information ultimately comes off of the credit report, not what the borrower has plugged in. And I say that to say, as a closer, so many times I saw stuff on a 1003, including the occupancy question, that had been, for example, defaulted in. Mm-hmm. Sorry, I'm probably jumping ahead in the conversation, but people don't realize how common it is.
The other part of it is when there would be issues related to, well, is there a mortgage fraud for income, right?
Right.
Or misrepresentation of income. Well, you look at the 1003 and the income changes moment to moment. And part of it is because there's updated information. The tax transcripts become available all of a sudden in the middle of origination and everything changes. There's reasons why these things change and completely legitimate reasons, right? There's also the fact that the consumer isn't the only one signing the 1003. The loan originator is also signing the 1003. One of the kind of examples and the tidbits I would point to is that some of the loan files I had to review were, after the mortgage crisis, and the ones that had been originated during the mortgage crisis. So you would start seeing patterns, and you'd start seeing patterns in things that would seem to be inconsistent or wrong. My favorite example was someone who is 5 years out of college as a librarian. One of the things that you have on the 1003 is years in the profession as one of the pieces of information. You would see that they're 5 years out of college and they initially stay 5 years on their years in the profession. It gets to origination, all of a sudden it's 25 years. Because some originators at the time understood that their underwriting desks would use that as a basis for looking at projected future income. And so they would start manipulating those days. The 1003 is an extremely long document, extremely technical, with a lot of information. When a consumer goes through, based on my experience with TRID and the testing that went on there, it is highly likely that consumers just glossed over things like, how many years have you been in the profession? How many years is this? How many years is that? Some, at closing, when I would go through the 1003 with consumers, I'd say, look, this is the 1003. It's basically the information that you provided to the loan originator together with the credit report. I'd like you to scan it to see if that is consistent, but I'm not there to go through all the documents and evaluate whether you've got all the information correctly. Go through it. If there's anything that jumps out, let me know. I can talk to the closer or talk to somebody and see if there's an issue here. Scan through, sign. Initial here, initial, sign. I know when I would go through, I'd go through and I'm like, well, that's not quite right. But then I'd go, okay, well, that's not quite right because they pulled that information from the credit report, and the credit report always lags the current information. So I've got an argument.
Right.
At the time they pulled it, that was correct. So it's something where there are a lot of things that you have to take into account of the document itself, who prepared it, why they prepared it, who's doing it. Are there incentives for somebody other than the borrower to do something here? Are there simple mistakes? Like you said, the 1003 was pre-coded that since the originator only did this type of loan, we're not going to change the checkbox. We're just going to have it set. That's in the days before better information technology.
Right.
The way I'd put it is this. If I'm going to prove fraud, I need to anticipate counter-arguments, right? Because if somebody's going to push this all the way to like going with a criminal trial, they're going to have to establish that there's going to be defenses. There's going to be arguments about why this isn't. So you have to kind of test those arguments as you're going through the document.
Yes, it's such a good point. And in the bad old days, and I haven't been at the table for a while, but in the bad old days, another thing would happen where a lot of times the borrower would bring a copy of their original hand-completed 1003. I go, okay, great. Compare that to this. And they'd be like, and they'd hit this happened all the time, David. And they'd hit a discrepancy and they were like, what do we do? And of course, my answer is always, hold on, let's call your lender.
Right.
Well, you couldn't get the lender 9 times out of 10. You certainly couldn't get to a decision maker. And so you go, well, we'll wait for them. And they go, well, is it a big deal? Well, I don't know. Well, it's just my time on the job, or it's just my this. It's probably fine.
Right.
Again, no intent, right? I wouldn't think that would be intent.
And some of it is also, if you think about the closing table and everything, it differs across the country because in different places, there's not such a sense of urgency. But on the East Coast, it's a wet settlement state. The money's in the account.
Yeah.
Everything's ready to go.
We're going.
Everything's ready to transact. The moving vans are outside the door. The kids are getting antsy.
Right. The whole deal.
You get into that situation, and I have had that happen at closing tables. And of course, it's probably the bad old days. But it's like, well, look, is it generally accurate? Right? Is it reasonable? My credit card balance is different. They pulled a credit report. It's probably lagging by 2 months. Is this generally what you had in 2 months ago?
Yeah, kind of plus or minus.
Yeah, right. Because everybody at the table is like, this is a process that's taken us 2 months to get done. 1 month or 2 months to get done. Are we going to hold up and not have the transaction conducted because your years working in a job is off by 18 months? Is that a material representation? And that's the other thing about fraud cases.
Okay.
There's a requirement that whatever matter you have represented is material to the transaction. Is it a material misrepresentation that you have another credit card that has $1,000 balance that wasn't captured? Okay. Is that going to make a difference for underwriting and everything else? Could it? Yes. Did it in this case? Well, what are the facts, right? How would that have changed your underwriting criteria or your matrix as to whether this person qualified for the loan, right? Would be the question. If it's something that's not material, it wouldn't change anything. It's not going to be found as fraud because it wasn't a material misrepresentation. I'm trying to think of things on the 1003. I apologize.
That's all right.
But if it's something that it's like extremely minor, the property is 3/4 of an acre instead of 8/10 of an acre. Is that a material representation to your underwriting? Did the consumer even know about it? Those are kind of the questions that you would have in a fraud company.
Okay. So, and I want to drill down in that group a little bit more, but first I want to, because we have people from across the real estate sector in our audience, but from the title and settlement company perspective, we kind of see discrepancies go across in the loan apps. But that's not really when somebody says mortgage fraud, that's not typically what we think of. What we typically think of are the bigger, broader schemes and scams that, FHA schemes and scams, or flipping rent-to-own schemes and scams, or people coming in and stealing equity schemes and scams. So I kind of want, for our audience's benefit, to delineate between the two types.
One way
fraud.
you could do that is most of the things that you're talking about is something that is one type of fraud that we talk about in this space, and that's fraud for money. So
Okay.
the whole point of those schemes is to get money out of a lender that they shouldn't be able to get in any way, shape, or form. Or
Okay.
they're trying to get money that it doesn't belong to them out of the earnest money deposit. They want the
Right.
earnest money deposit wired to them. They're trying to do this for money. Those tend to be a little bit easier to prove
Okay.
from a mortgage fraud perspective because you have exterior things. So you have wire instructions and emails about where to send money, and it's easy to show that that's for intent because you're trying to get money that doesn't belong to you. It's
Yep.
kind of, you can use other documentation in the context of whatever scheme it is to show that there is a fraud going on. What's different is a lot of the types of fraud that are being discussed about today are largely fraud for housing. Is a category entitled fraud for housing. In other words, you're making a misrepresentation not to get money from the lender. You're getting money from the lender, but you're going to pay it back. You have every intent of paying it back. You're not trying to do this for getting the money and taking the money and running. You're attempting to buy a house. And that's the thing that always frustrated me at the bureau, is trying to talk to people and they would say, okay, about mortgages, and why aren't people shopping for mortgages? And it's like, well, they're not shopping for a mortgage. They're shopping for a house most of the time. Unless they're
True.
refinancing, right? They're shopping for a house. Mortgage
Yes.
is to the means to the end, right?
Yes.
So in this context, fraud for housing is somebody trying to get the house. That's what they want to do. When fraud gets involved, it's when, okay, well, my current income, there's no way I can afford this house. So I'm going to misrepresent what my income is in order to get the mortgage, but I'm not worried because my ship's going to come in, or I'm going to make a bunch in crypto, or whatever fantasy that they may have in their head as to how they're going to strike it rich. And once that happens, I'll be able to make all the mortgage payments. So that is a fraud. But is it a fraud when you're trying to get the house and you're working with a mortgage broker and they're saying, well, based on, you've given me your most recent payments and your bonus and everything, and there's a way I can qualify the bonus to try to represent this income can be used for underwriting purposes. And is that a consumer committing fraud if that wasn't done properly? There's no intent there. There's nothing about it. It could be material, right? The mortgage broker is working with them to try to represent what the income is, right? Could it be could the fraud be from an insider, right? Could it be something that the insider did to try to help get the loan approved?
All right. I want to come back to fraud for housing later because, again, in the title settlement world, that one's a little bit different for us. We see the fraud for money a lot. And again, I don't think that's in the headlines, although it's interesting. I am going to have a question for you as we clarify the two kinds of fraud for money and the fraud for housing. I do want to clarify because I think the allegations on some of these newer sets of charges are similar to, I think, like Chris Dodd got kind of popped on back in time, which was, I think the allegation is you misrepresented it as owner occupied when it's not, it's investment, so that you could get a more favorable interest rate or term. So I want to leave that there at the fraud for housing. I wanted to clarify that because it can start to sound like fraud for money, like you're getting a lower interest rate, but it's a little kludgy there.
Well, it depends. So I think I saw there's a professor at Georgetown, Adam Levitin, who deals mostly in bankruptcy matters, but bankruptcy, often you have allegations of fraud that have to be proven up in some of the claims related to bankruptcy.
Yeah.
So he had kind of pointed out that when you're talking about those sorts of things, the loan level pricing adjustments for differentiation between first and second homes, there wasn't any at the time. So if there's no material consequence to the loan, as I was saying before, you can't say it's fraud. Now, is it something where they could say something about that, or there could be a penalty involved because of a contractual term? That's possible, but there's a difference between fraud and contract, right?
Yes.
That I think gets lost on some people. And fraud is a criminal matter where you're inducing somebody to contract under misrepresented terms, right? And so you have an intent requirement. That must have been your intent to get them to do something they wouldn't have otherwise done by this misrepresentation. In contract, okay, you violated a clause of the contract, okay? Well, what's the remedy to that? It's not throwing somebody in jail. I hate to tell people. There are remedies either fee, either money, or other things. When you're looking at individual documents, the thing that comes to mind, of course, is the security instrument,
Right.
deed of trust, mortgage, whatever it's called in a particular jurisdiction. And it's something where, okay, you can have a clause in the security instrument. Sorry, glitched there for a second. You can have a clause in the security instrument that says you are prohibited, and I'm going to use a different example because it was my favorite when I was doing closings. You have a clause that says that you cannot store hazardous materials on your property. And it's rather extensive and it's rather voluminous. It sticks out in my mind because I had an FBI agent that I was doing the closing with me start asking me very pointed questions about what that meant.
I'll bet.
So you have that clause in there in the security instrument. Okay, well, you violated that clause. You violated that covenant, as it would be called in title. What is the remedy for the violation of that covenant? Is it throwing somebody in jail?
Call the loan due, I think, is the harshest I've seen.
You can accelerate.
Yeah, accelerate.
Amount due and foreclose. That's your remedy under a security instrument.
Yeah.
So you violate.
There it is.
You store hazardous materials? Okay. And part of the question I then ask is, do mortgage servicers have roving bands of people checking to see how you're storing your gasoline for your lawnmower in your garage? No, it doesn't make any sense. And the reason why is because it's there to protect the holder of the mortgage in case something goes wrong, so that you can then accelerate it. Even if the person has kept up with their payments, even if they haven't done anything else wrong in the mortgage, if there's a fire that causes damage to the home that's substantial enough, and you get out your slide rules and you calculate how much that damage level will be, then you can mitigate your damage by accelerating it, selling what you can, absorbing a smaller loss on that transaction. So it's something where when you're talking about individual documents, you have to think about, well, what is this document? What is its purpose? What is it intended to do? And if you violate that covenant, what is the consequence?
Right. Okay. Sorry. Yeah, that makes total sense.
Sorry, I might have gone down a little bit of a rabbit hole.
No, it's perfect. I'm just, again, this type is the type that title and settlement have less experience with, because again, unless a borrower is sitting at the closing table going, wow, no, I have $1,277.06 in my bank account today, not this other thing. We notice discrepancies, but not showstoppers, to use a phrase. And so a lot of times this happens so far down the line from when we've closed and issued policy and all that we don't see a lot of it. So that's why I have a lot of questions for you today on it.
Yeah, and I think if I'm thinking about kind of fraud, mortgage fraud more generally, there's a lot of information about it in the press. And I think one thing that as an industry we should think about is much more precise. Consumers will want to expect these things to be, because if there's talk of, oh my God, somebody could accuse me of mortgage fraud and I could lose my job, that tends to kind of get people to focus more on it and be less willing to go, it's a $20 delta. Is that material? Is that really going to change anything? People are going to become more risk adverse.
That's a good point.
To describe it, and say, well, wait a second, I'm not going forward with anything if anybody can accuse me of doing something wrong and I lose my job.
Right. You're right. And at least in the bad old days, when we would get a hold of somebody at the bank and we'd ask about this, they would either say it's not material enough, it wouldn't change your ratios, it wouldn't change it. Go ahead. When we could get somebody, that was the answer. And so you're right. So when you have the bank saying, fine, but now you may have the borrower, it'd be a showstopper. No, I need this perfect.
And more to the point, how many times did people document in their files who they got a hold to, when they got a hold to them, what their position was? Did they have the authority to give you that information, or is the bank going to disclaim authority? I mean, doing all the things that you need to do to document it, because, like I've said before, it's not just the borrower who can be implicated in these types of investigations. Yeah. The mortgage, the loan officer.
Loan officer, for sure.
The title company. And there have been even talk about certain representations made on title-related documents that were never even shared with a lender.
Yeah, and that's why I really wanted to come on today and talk about this, because again, and I want to switch over and talk about some of the other frauds, some of the money frauds that our industry does deal with more. But that's why I wanted to spend so much time down in this one, so that our folks can know what to think about it and what would be a good idea to do when this is going to happen at somebody's table. With all the noise in the news right now, this is going to happen at somebody's table. So helping them know what to think about it and how to approach it, I think, is really important.
When I was with TRID, there was a change in who was responsible for filling out the forms. Am I, the title agent, going to be responsible? Well, it's like, no, if somebody's telling you to do something and you don't think it's right, you say that you don't think it's right. You document that you said that you didn't think it's right, and then you put in there, this is why, and you move on. So that when in the course of human events that comes back and it comes up, and you can go, okay, well, it can be 10, 15, 20, 30 years later. You want to have that in the file. You want to be able to document exactly what you did, exactly the questions you asked, exactly what you talked about, exactly what you said, so that you're not dragged into whatever the issue is, especially at closing tables, because you don't have as much leeway in controlling it, because you're a service provider. You're not there as an independent arbiter of what the transaction should be or is.
And I think that the old language that used to go under the settlement agent's signature on the HUD one, that's obviously a different scenario there. But to your point about when you sign off on the closing instructions, what are you seeing? There are certainly plenty of other documents that can bring you in to at least being a part of it. And if you work for a company of any size, or they expect that you have an insurance policy of any size, you're going to get added to the list of people who should have known better or whatever.
Right. And even if you're not at fault in any way, shape, or form, you might have to get counsel involved. You might have to make an insurance claim, right? And get legal defense. It starts becoming a lot more costly than just, hey, it's another phone call to the closer.
And there's so many times that a borrower turns to a settlement agent or closing attorney and says, should I be signing this loan? And I think this now might come in under that umbrella of things you need to have an answer to.
Yeah,
at the ready.
Not only do you have potential unauthorized practice of law questions, you also could be dragged into who knows what.
Yeah. I think people have to have an answer and teach their people what to be on the lookout for this kind, and the water's edge of it. There's some of it that just frankly isn't our business.
Right. Those of us who are doing this, who are attorneys, neither party is your client, right? From a legal perspective. It's an up in the air type of discussion that we don't have time to get into, obviously. Yeah. But the best thing I've always said is you've got two parties that have already contracted. What you're doing is you're taking the contract and making sure that the parties adhere to it, that everything's done according to that contract, and you're performing the duties that you've been assigned to under the closing instructions and the title insurance commitment to make sure that everything is done according to what the requirements are of all parties.
Yes, and I can also see if you wrote a lender's policy on the deal, let's say you do a scenario with me and I might be all wet, and I'm sorry, this has just popped into my head, so I might be completely out to lunch on it, and that's fair and fine. Let's say a lot of these high profile headline making discussions right now on this. And let's say it comes through the course of investigation and things that one bank seemed to be kind of the hot spot for this activity. Maybe there was a, hey, come here and we'll be friendly or whatever, or rightly or wrongly, maybe there's one bank. And if that one bank, if you have a policy out to them and or did their closing and signed their closing instructions and or made other representations, warrants, commitments, whatever, then that bank got in hot water. Let's say XYZ bank gets in hot water because they were the place to go for these loans. Can they go, well, this was apparently my partner in crime over here. You need to sue them too. Or I don't know how that goes.
Well, it gets even more complicated when you start talking about affiliated business arrangements. I don't even think about that.
I don't either.
It's a question of knowledge, right?
Okay. Yep.
Okay.
And intent.
They did my closings. Well, did you provide any legal advice to them? Did you provide any advice to them about what they're doing, right? Then you're definitely exposed. But if you're just doing the closings and there's nothing in the closing instructions and there's nothing that, you're there to take the money that was lent, apply it to the transaction, disperse the monies according to all of the instructions and what you've put on the closing disclosure. As long as you're doing that and you're not doing anything else, I don't know that you can do that. You can really be dragged. It would be fact specific is what I'm trying to say.
Yeah, it sure would.
It's going to be hard to drag you in if you're just doing the title work. You're just doing the title work. It's going to be hard to drag in for things related to the 1003 or things like that.
But if you close,
that's not really your job.
Yeah, I don't know. One thing I wanted to ask, I think you've done a great job of helping people understand, okay, there has to be intent. It has to be more than a checkbox. It has to be more than a funny feeling in the universe. It takes some pretty clear standards to be blown through and violated. I want to talk about the primary residence piece a little bit, because that's, at least again in the headlines that are going on right now, sort of a key component. And you and I were talking in the green room earlier. You mentioned that primary residence doesn't really have a clear definition in mortgage documents. What? Say more.
Yeah, I would point to Fannie's own definitions. Let me see if I've got the citation quite right. Okay. In Fannie's selling guide, it says that a primary resident, they use principal residence, right?
Okay.
Principal,
right? Yep.
And they define principal residence as a primary residence.
Okay.
With some exceptions, of course,
Okay.
where it's considered a principal or primary residence when the borrower doesn't actually occupy it. There's even specific things that Fannie recognizes where the borrower isn't in the property that they still consider them to be a primary or principal residence.
I was not aware of that.
And that is, if you look at the selling guide, the reference is B2-1.1-01.
Okay.
I looked it up the other day.
Okay. And it says?
And that's basically what it says. I won't get into the exceptions because it can be considered a loan for primary residence if children are getting a mortgage for their parents' home and the parents aren't earning income. And same thing if they're buying it for their child and the child doesn't earn any income. Okay, and there's some, there's some other ones that are rather complicated that I quite frankly have forgotten at this point. And so it's something where there's a lot of like, what is primary and what is principal? Right. There's a lot of not clear definitions in a lot of these things. I mean, I'll mention Adam Levitin again. He says that, for example, the security instrument, it's got a lot of definitions, it's got a lot of terms, it's got a lot of everything. There hasn't been much litigation on the Fannie Freddie documentation as to what those terms actually mean. So because of that, some things like, well, what is a primary? What is a principal residence? There's no real clear definition that people can latch on to. So, of course, people seeking one will find it somewhere else. And that presents a challenge.
Yeah, it sure does. I think we might have an opportunity to get some of those definitions pointed out here really soon. Interestingly, in some of the press I've seen about this, some of the articles will reference like the IRS has a 180-day rule about principal or primary residence. Or can you talk to that? Is that a good measurement or no?
It's one that's kind of salient, especially in the mortgage industry, because questions of what the tax treatment of anything is going to be is always an important aspect. But the thing is that for tax purposes, it's a question of, are you qualified for a tax credit? That's what the purpose of the tax code is.
The homestead credit or the...
So for our purposes, to determine whether you can deduct your home mortgage interest, we're going to use a test that you have resided in the property. And of course, what does resided mean? It's the lawyer. Sorry.
No, it's fair. I laugh because it's true.
You've resided in your home. You've spent the night. That's one of the most common terms that I've seen from a legal standpoint. That's where you go home to go to sleep for 180 days out of 365 in a year. You have to get to 181. That's your primary residence for purposes of...
So you just click every time you click, click.
Exactly.
Okay, got it.
Is that what we mean by primary residence in the residential loan documents? I don't know. Could somebody keep a calendar and say, mark it down every time they sleep somewhere to establish that I've occupied the property for a year? That doesn't make much sense because without a tax credit, you've only spent 180 days. So you've only spent 6 months. So really you haven't spent a year there. It's just type of the arguments and the questions that you would have if you would use that tax definition, right?
Right. Well, and so in a scenario like, let's say I'm a member of Congress and I represent my district here in Northwest Illinois. And so I'm backing and forthing. And let's say, I know a lot of folks can't afford to, some people sleep in their offices. So I get it. But let's say I'm good to go and I buy a nice place up on the hill. I don't want to rent. I want to buy. And I do that. If I don't get that 180 mix quite right, I'm going to ask this in question form, but it might be rhetorical. Does my lender want me ringing them up and going, okay, we need to switch the place in Illinois to an investment and we need to make my place in DC primary or whatever? Like, I've never met anybody that informed their lender of some change circumstance like that.
So part of it for me is, okay, if the occupancy, that you're going to inform your servicer, lender servicer really means the same thing just because of contractual obligations of who's doing what.
Yep.
So I'm going to call up my servicer and I'm going to explain to them that I can move. Now, the standard in the standard Fannie Mae Freddie Mac document is that the servicer will not unreasonably withhold consent to letting you move, so to speak. So I know of no servicers that have any type of criteria that they use for their call centers to go through and go, okay, well, this is how we're going to assess this.
Right. And by the way, we'll send you out this mortgage rider. We're going to need you to notarize that. We're going to need to get that filed so that it connotes publicly that we're changing the terms and this isn't your primary anymore. And
you might not even need to do that. For example, In Washington State, they actually have an assignment of rents in the middle of their standard form.
Yeah.
They don't even need a writer.
There you go.
And so you don't even need to document in any way that you've changed your primary residence.
Because that was always the old argument. Well, they need to be able to attach your rents if you blow it. If they're incorporating that language automatically.
They're already incorporating their language in the security instrument.
Well, there you go.
Come on. There's no registry of somebody's primary residence, right?
Mm-hmm.
And if you just go through some scenarios, you were talking about a politician who moves to D.C. The first question I would have is, do they have a spouse? Okay.
And where are they?
Should the spouse be maintaining the other property as their primary residence while the other person has moved across the country to D.C. to be a member of Congress for 2 years, 4 years?
And that has to count for something, right? If they do, arguably.
Right. And if they're both applicants on the mortgage,
yeah, then
and they're maintaining residences in 2 different locations, well, then one person this is somebody's primary residence. You have a cousin that you're co-signing a loan on, and it's going to be that cousin's primary residence. Is it a misrepresentation to say that this is going to be a primary residence?
I wouldn't see how it would be, David.
Well, so that's kind of the questions that you kind of get to when you have these types of definitions that nobody's defined them. And then I went to Fannie just to see, what do they say in their servicing guide about issues related to occupancy?
Okay.
The only places where that comes up is when you're in foreclosure. You have to establish what the occupancy status is, whether the borrower is someone is living there or not, because that triggers, if it has been abandoned, then you have steps that you have to take and things like that. Okay, that makes sense. The only other place I could find was there's a provision in the servicing guide where if someone wants to have a covenant waived, like for example, an occupancy covenant on the security instrument, the obligation is to contact Fannie. That's it. There's a request to have one of the covenants waived. Like, there's no standard.
Can I do carrier pigeon? Will that work? Like,
well, I mean, there
is a method. Okay, there is a prescribed method. Okay,
specific place
yeah,
and requests.
Okay, got it.
But there's no. These are the types we will entertain. These are the types we don't. This is the general way we view these types of requests. This is something where, hey, we're telling you we're not going to entertain any of these types of requests, right? Which is how they usually reference things in their selling and servicing guides.
Yes.
To give people some idea so that they're not inundated. Fannie isn't inundated with requests for waivers.
A leaf blew.
Fannie doesn't want to have to do a lot of individual analysis of case-by-case things of what to do to waive and what not to waive. There's nothing there. I don't know of anybody who would think of calling in the middle of you've refinanced 3 months, 4 months go by. Everything's fine. Everything's going along swimmingly. All of a sudden, out of the blue, you hear from a former colleague who wants to pay for your moving, wants to give you a raise, and is going to fly you first class across the country to set up shop in their office.
Okay.
Your family, bring the family too. We'll pay for them to come out too.
Yep.
You're going to do all of that. You're going to change your jobs. You're going to move your house. You're going to get your kids out of school and into the new school and do all of that together. Oh, and by the way, I got to call my mortgage servicer and try to see if they're okay with me moving since it's been less than a year since I refinanced. So that's on my list of things to do in a
right. Yeah, it's very high on the list of things that never happen.
So the reason why I point this out is that, people say it's bad that there's occupancy fraud. Okay. And we're defining occupancy fraud as not only that you intend in the next 60 days to move into the property, but you have to be there for a year. But there's nothing in there for any of the very, very easily identifiable instances where that could happen in that year. Sure. And I could go on. About divorces. 4 months later, you get divorced. 4 months later, you have this happen. 4 months later, you have that happen.
Right.
There's nothing. There's no guidance. There's no anything. And so if that's something that you want to enforce and expect your borrowers to do, why don't you have processes and policies in place so that you can do that if that's what you're expecting the consumer to do?
Right. And when you kind of layer everything we've talked about so far together, this is not a new issue.
No, it is not.
It is getting some new scrutiny. I'm not going to say scrutiny yet, headlines yet. And what I hear you saying, and I'm very relieved to hear it, let me make sure I've got it right. There has to be fraudulent intent to defraud. There's play in these headlines, in the joints of these headlines, because they're not talking legal definitions of things. They're just talking about the appearance of the flowers in the garden, or whatever, the appearance of things.
A checkbox on a document, or
a checkbox on a document
that is for another purpose, or not everything in the file. right?
But when it comes to legally finding and proving mortgage fraud, if you can't find and allege
Prove.
intent to defraud,
It's the responsibility of the prosecutor to prove the facts of the crime. It's not on the person that you're accusing to prove that they didn't defraud.
So even if I went to the Wall Street Journal and waved around this document that said, look, David Frame, check right there. It's not accurate what he's doing. That's not worth anything when we're talking about this.
The way I would always explain it to people is some people might have had a question at a settlement table. How would you explain this to people at a settlement table? And one of the things I always try to tell them is this what you're intending to do now, today, as we're talking? Are you intending to move into this house within 60 days and stay there for about a year? Is that what you're intending to do now? Yeah. Okay. Well, fine. I never had anybody like 30 days later call me and say, oh my God, I can't move in.
Yeah.
And the reason I can't move in is because we did a little bit more searching and a little bit more thinking, and we want to renovate the kitchen. And we really just don't want to live in that house while we're renovating the kitchen. It's a mess. It's a nightmare. And we've got this company. They'll get it done. They say it's 30 days, but you know how it goes.
Call your lender.
They violated the 60-day covenant because they didn't move in 60 days.
Oh my God, it's constant. I mean, that's so common.
So the thing is, it's like, what is your intent? What are you trying to accomplish? And when you're bringing mortgage fraud cases, most of the time I've seen mortgage fraud cases brought is with insiders. And what I mean by insiders is people who have knowledge of how the process works. Mortgage brokers, settlement companies, real estate agents. There's some scheme that they come up with to try to get more money out.
And that tends to be your money fraud, right? Not your housing fraud, your money fraud. Those are bigger scales. That's
right.
Like we talked at the top.
So when you're talking about thinking about this, it's like thinking about leave the borrower to the side. Money fraud are the people inside your organization that can siphon money off from you or your business partners for their own purposes. It's just like that. And then you have criminal actors out there who are seeking to get money from other people. That's your money fraud. Your fraud for housing is people looking to get proving that is a lot harder. And that's really why I kind of established that dichotomy. Why did you do this? Well, you had $20,000 that was thrown into your bank account that you wouldn't have otherwise gotten. Okay, that's easy. That's an easy motivation to prove. It's harder to prove that I made this kind of little adjustment to my 1003 at the suggestion of my mortgage broker because it would help speed this up. You're going to have a harder time proving that they had an intent to defraud.
You're absolutely right. Well, and I really do appreciate you taking the time to walk down these two distinct paths, because when anybody in our business hears mortgage fraud, like we're listening.
You should, because there could be potential liability on your part, or it could be involving one of your insiders, one of your employees, or one of the people that you do business with. And that, of course, could have implications and risks for you yourself. Yeah. So, of course, you're going to be very, very attentive to these sorts of things. And it's good that you are. But translating that into people doing bad things, it's a little bit more nuanced, depending on the facts, depending on things like that. No one document can prove a fraudulent intent. It's a totality of circumstances type of thing that you have to think about. Okay, what was it? What are the other documents in the file? What are the other documents that aren't even in the file? One of the frustrating things I've seen is some of the press rushing to go to, they claimed it for their real estate tax purposes. And that means, and it's like, no.
That one's driven me crazy too.
Guys, we're talking about
apples and oranges.
Credits for like homestead exemptions and things like that. The rules there are much more convoluted than you could ever imagine. You've got 3,400 different taxing jurisdictions across the United States that can have different definitions for what those things mean. It's apples and oranges.
And it's in many states, it's impossible to tell from anything filed from the public record whether it was purchased as a primary residence or an investment property. Now, some states you can, but most states you can't.
Right. And when you're talking about those things, if you misapplied for a tax credit that you weren't eligible for, what is the remedy? The remedy is your taxes go up.
And you're going to have to pay the back.
You're going to have to pay back taxes and your taxes go up.
They don't take away your house or your job.
You're not looking at a 10 to 20 year prison sentence unless there's a scheme and you can prove a lot of intent to try to avoid taxes. But that's, again, how are you going to prove that? You could have back taxes due because you applied for the deduction and then they decided that you're not eligible. Or there's some other criteria that you didn't meet that they didn't catch the first year, but Sorry, from here on out, you're going to be paying this.
Well, and I'm with you. That's where a lot of critical thinking about some of these cases in the news right now has been missing, which is, well, look at the tax records, look at the county records. I'm like, that tells you nothing, nothing about this loan. And even if you have a supplemental questionnaire that gets filed with the mortgage or deed of trust. And so what I've been trying to tell lay people when I'm talking, they ask about this, because they do, and I just tell them, to your point, you have to see the entire loan file. That's going to tell part of the entire story.
And then I want more. I want all the communications between the parties. I want the emails back and forth. I want this and that, and try to identify, okay, do I have something in those emails that can indicate to me that there was an intent on the person's behalf to defraud the lender? Because that's the legal requirement that I have to show.
Thank you for making the time to help us sort this through. This is going to current rash will play out on its own, but I thought it was just a really important time to come in and remind people what fraud is technically, what fraud is talked about casually, and how to position their business responsibly somewhere in that.
So you have to think about it. There's a lot of compliance training and a lot of guidance that's out there about what you need to be looking for when you're hearing about these sorts of things. And it's good to know where your position is and the risks you take when you're dealing with other parties. You can be dragged into some of these things if those other parties aren't protecting themselves as well as you are. Yeah. So vendor management is very key here as well.
It always comes into play on everything, doesn't it?
Nowadays, yes.
Thank you for helping make sense of this. Thank you for always bringing clarity when we have confusion, and I hope to see you again back soon on the pod.
I hope I provided some benefit. So thank you very much. You have a very good day.
You too. Well, mortgage fraud may capture headlines when high-profile names are involved, but as David Friend reminded us today, the real story is in the details, the subtle misrepresentations, the gaps in oversight, and the challenges in proving intent. So for those of us in the real estate and settlement services industry, the takeaway is clear. Vigilance, clarity, and a deeper understanding of how fraud really works are essential to protecting both consumers and institutions. So thanks again to David for sharing your expertise, and thank you for joining us on Keys to Real Estate. Until next time, I'm Mary Schuster for October Research, where knowledge is the competitive advantage.